Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo nightly video for the 15th of April here in 2021. And title of today's discussion is What's Bad for Yields is Good for Stocks. And what we're looking at is the TNX. What's the TNX? It's the 10-year Treasury yield. But it's listed a little strangely on your Thinkorswim charts. So it's coming down from this roughly 18 and 17 level, and it just plunged today. Not a large percent necessarily, but this is an hourly chart, and it's a plunge off the high. It's a down swing. It's a down swing in yields. That's the rate. But keep in mind, this is not 16, 17, or 18, nor is this a tradable product. It represents the 10-year Treasury yield. And that 16 is 1.6%. 1.5 or 15 is 1.5%. The same is going to happen in 30-year bonds and other types of interest rate products as displayed on Thinkorswim. So what this is saying is the yield recently for the 10-year Treasury note, TNX, traded up from 0.6, that is less than 1%, all the way up more than doubling to peak just shy of 1.8%. That's a Treasury yield. Now, that down day in the bond yield has represented now here's the exact opposite chart, because this is the ZN, the futures product ZN. And this is the 10-year Treasury note. It's the price. This is tradable. This is optionable. And if you don't want to trade the futures product, you can look at TLT, which is a more common type of ETF, or IEF. These are similar type of products, and there are many ways to invest, trade, or position or hedge within these products. Now, the key of tonight's video is this bounce, is this surge, relatively speaking, in the Treasury market. Let's take a look at TLT. That's up 1.6%. In terms of the stock market, the Nasdaq was up 1.5%, so that doesn't seem like a whole lot. But for the Treasury market, the bond market, it tends to be stable. It doesn't move that much. So this is a little bit surprising, and I think we're seeing a little bit why. It's the bonds with the financials. So the financial sector, that's XLF, which is right here. And we can see in the list of S&P 100 stocks, some of the weakest stocks in today's session were financial names, because this is the days until expiration. And when it says 0 right here, that means that these stocks had earnings today. That includes BlackRock, Citigroup, Bank of America, which is down almost 3% today, US Bank Core, which is down about 2%, and United Healthcare, which is up about 4%. Now, these are the ones that had earnings, but if we spread or broaden the list to the percent change names, we still see the similar. But not only are financials in the weakest position, it's actually energy stocks. Some of the energy names are the weakest of today's session, and they include ConocoPhillips and some of the others, ExxonMobil, and there's ExxonMobil and Chevron Texaco. Not stellar declines, but still, they are at the weakest of the stocks in today's session. Back to the financials. Now, what we're looking at is this bounce in the bond market, which is a bullish type of rally or snap back, rubber band snap back to the upside. Did that result in a rubber band snap back to the downside in the equity market? No, it did not. And yet we have more highs. I find a difficult way to title the presentations of the videos with yet another day with new all-time highs, but that is where we are. And the market remains overbought, overextended, and this weakness in the financial sector or financial products on some earning names corresponded with a strong bounce in the bond market. And of course, by proxy, that meant the Treasury yield fell. So lots of things to unpack in today's session. Nevertheless, the Nasdaq extended to a new all-time high. And of course, the S&P, the Nasdaq played catch up to the S&P, but the S&P is just going, and is not seeming to stop. This will not last forever. It will pull back, but we are in this situation right here at the middle of April with this overextended market that continues a persistent rally. And we're looking at earnings coming up in the next few sessions or in the next few days, and this week into next. We have Bank of New York Mellon. We also have Morgan Stanley. There is Coca-Cola, and then IBM, and the list goes on. 2 stocks that have earnings into next week: Abbott Labs, Lockheed Martin, Procter & Gamble, Philip Morris, Johnson & Johnson, and so on. So we're back in earnings, or into earnings, here in this quarter, here in 2021. We still find ourselves in an overbought market with many stocks pushing to new highs, or at least making new 52-week highs. What's the trade right now? The trade's going to be fade. Trade's going to be short. Trade's going to be anything that is overextended tends to pull back or retrace or push lower. And despite the fact that we continue this bull market rally, bull market really since going back to the coronavirus crash in early 2020, we don't want to get long right now. It's not good risk control. It's not good risk management, nor is it good opportunity management to get long all-time highs. And the reason we say that is just from experience, getting long new all-time highs tends to occur before a pullback. These are just essentially retracements in the market. And the more a stock or a market gets overextended, the sharper or harder it tends to pull back. So that's just recent history going back, and this is the way this tends to work in trending environments like this. This is clearly an overshoot, overextension, and this is the hourly chart continuing relentlessly higher. So it's just too late to get long. That ship has sailed. The most recent time to get long was on pullbacks or retracements, if you are a short-term trader. So we're going to be continuing to watch the bond market, to watch how stocks perform at these highs, and of course, each day, make note of stocks joining the S&P 500 at all-time highs. These would include tech leaders. I like to sort this list by market cap. It's just a scan for stocks making new 52-week highs. And the thought process is these are strong and they should probably get stronger or continue the uptrend. But that doesn't give us a spot to get long or to put on risk or put on positions. That is done on pullbacks or when the market snaps back to fair value. And if that hasn't happened, the advanced or aggressive strategy is to purchase puts or to put risk on for the pullback. If that is not what you want to do, then you need to wait and be patient for the market to snap back, pull back, retrace, and come back to a little bit of fair valuation to keep these trends going. And that's been the logic all the way back. So things that get overheated snap back quite powerfully, and the opportunities tend to favor the long side of the market unless you want to play a little hedge or defensive maneuvers in overbought markets to try to capture the rubber band snapback. The only problem is markets that get overextended can overheat and they can keep going. It just means that drop could be even more painful to the bulls or those that are buying these new all-time highs. That's not a good strategy short term. Long term maybe, but not short term. Meaning that if you would have bought that high, it took about a month to get back to break even. If you bought this high, it took about 2 months to get back to break even. And if you bought this high, I don't know how long this will go or how deep that pullback will be. But that's the probability. As we go into next week, we go into Friday. Again, earnings are in play. Earnings will be in focus and how that reports. It is strange that some of the bank names did report strong earnings and strong sales and strong profits, but yet their stock, some of them at least, fell by 2 or more %. So we don't want to look too much within these levels and use earnings as guides to follow and give us clues or give us information about the broader health of the economy. Retail sales were strong today, and that was one of the catalysts that sent the market higher. But then again, the strangeness of today's market was that bonds joined into the strength. The difference is bonds are rallying off lows and trading higher. Stocks just kept going higher. It is a little bit of a disconnect that keeps us on our guard and keeps us hedged, protected and monitoring any open positions very carefully. As always, be safe. This is Corey Rosenblum with tonight's Theo video update for April 15th, 2021.